Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for February the 2nd. So today is going to be a really important day for Bitcoin. We're going to jump into what today means. We're also going to talk about some of the bigger picture stuff, and I'm going to give you a few tips about where you might want to look for long positions or short positions going forward from here. Before I jump into that content though, please do me a huge favor, hit the thumbs up button on the video, subscribe to the channel, and don't forget to click that bell icon to get notifications when I release new updates. So before we talk about the current price action, the first thing I want to teach you guys is something that my friend David Eisner taught me. He's another guy that I've known, I guess about a decade. He and I both had internet marketing businesses where we sold digital products online in various niches, and we both gravitated toward trading a few years ago. He's more of a position trader, whereas I'm more of a day trader. But he reads a lot of books on trading, and one of the books he read was this book about something called the magic line. And this magic line, essentially, it's basically a moving average that every market has, and every market's a little bit different. You've got to find the moving average that works best for the market. So this is a 19-week moving average, and you guys have heard me talk about this in past videos. You know, I'll often say, hey, people, you like the 21-week, but I like the 19. Well, I'm going to show you why the 19 is important and why I think that everybody should at least put this on their charts. So we're going to go all the way back. This is a BLX chart. We're going to go all the way back to 2011, and I'm going to put this in a log chart so that the scale is not quite so wonky. So if you look at this yellow line is the 19-week moving average, and essentially this has acted as your bull/bear market indicator. Okay, so in 2010 through 2011, if you'd have decided I'm not going to buy Bitcoin until it hits this line, which of course back then you would not have had the data to do so, but let's just say hypothetically you did. So if you would have bought Bitcoin when it touched that 19-week moving average, you would have been buying it at 60 cents. And of course, if you just sat and rode it from there, you could have rode it all the way up to the top, which was a gain of about 5,400%, right? And that was back in 2011 through the top in June of 2011, the first little micro bubble. Price then came back down and it fell underneath that 19-week moving average, and you can see that when it did, that 19-week moving average, when it was first broke through, was sitting around $9.55, and price actually collapsed all the way from that level. Right at that moving average, it collapsed about 80%, right? That was essentially the first bubble popping. Going forward from there, why is my scale all goofy here? Let's fix my scale. I was wondering what was going on there. So again, here's that first touch back here, right? Then once it broke north of it and retested it, if you decided, hey, I'm going to go ahead and get in there, you would have been getting in right about this point right here, okay? Which was right around $4.21. And it basically consolidated at that level before moving up. And if you didn't get in back here, no problem. Watch this. As you move forward, each time it touched this line, it acted as a buy signal. And you could have just been buying and buying and buying. And look at this. It stayed all the way above that line until it topped out at $268 in the summer. And if you just said, I'm not going to sell until it breaks south of it, you would have been selling around $95. Again, that's after buying it back here around $4. So again, really, really massive return. This was a little false break underneath it, okay? So no bear market ensued. It just kept going up, 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 and finally topped out in November of 2013 at a little under $1,200. Then when it fell underneath it, this is what concerns me right now, guys. It fell underneath it, came back up for this bearish retest, went down a bit, and then broke above it. And many people at this point probably were thinking that it was time to start longing Bitcoin because, again, finding support here looked like it was going to go up, but what it actually did was collapse from there. And in fact, from this high point, price collapsed 75%. Okay. Now, why does that concern me? I'll show you in just a second. But let's keep watching this 19-week moving average. Again, once it fell underneath it, you can see it started retesting it, and these would have been good places that you might have wanted to add to a short position or initiate a short position. But once it was actually in a confirmed uptrend, right, where it started punching in higher highs and higher lows, look at this. Touched it, moved up off of it, just kept riding it. And again, In 2017, if you'd have just been buying Bitcoin every time it touched this line, you would have been buying around $730. You would have been buying around $930. You would have been buying around $1,800. You would have been buying around $3,000, and you could have rode that all the way up to $20,000, right? Pretty crazy line. Then when it broke underneath it in 2018, it stayed underneath it until final capitulation. So why am I nervous? Why does this line make me a little nervous? Because guys, honestly, look at the similarities here. I kept trying to compare this entire market to this market right here. And it worked really well for me for about 6 months. But the last month, I just have not been, I have not been on point with what I thought the market was doing. You know, I thought it was going to pump up to maximum 91 to 9,200 and then just dump. And instead, what it did was it pumped up there. It did dump, right? So I was able to short that. Life was good. I was able to get out of that short about $8,200 when it started to look like it was finding support. But then instead of coming right back down under this line, it started going back up. So it's really thrown me for a loop and maybe a little bit unsure of what's coming next. There's just a lot of, you know, conflicting stories being told by the charts. But essentially, if you do go back and you do look at 2014, it did break back above this and it stayed above it, right? Unlike 2018, which was the fractal I thought we were in, where it broke above it once and then came right back down. Now it's starting to look more like this, okay? Where we broke above it and stayed above it for basically, what about 2 months, I guess that is? Let's look at a date real quick. I'm just eyeballing it. So, yeah, roughly 2.5 months it stayed above it. It even punched in a slightly higher high on the weekly. Just looked like the new bull market was starting. Looked like this was the bottom down here. And then instead, what you got was capitulation where it just completely fell apart. And like I said, it actually fell about 75%. Turn the magnet on, we'll find out. Yeah, roughly 75% in 231 days. And I talked about this in a past video already, how this, from this top over to this last green bar before the dump was 217 days. Well, here we are again, if we measure from our top in June to this bar here, 217 days. So starting to wonder what's up with that. But this isn't just about being cautious. It's really about the 19-week moving average. If you start seeing, if we get into a confirmed uptrend where this 19-week moving average is curling up, see right now it's curling down. But if you see this thing curling up and you see price pulling back to it, more often than not, it's a great place to look for a long position. I'm not telling you to invest. I'm not telling you to do anything. I'm just saying, me personally, I'm very excited about this idea that this is going to curl up and then I'm going to be able to buy the dips that are touching that line. And again, historically, going all the way back to the beginning of Bitcoin's history, this line has been a killer signal. Sure, there were some false signals along the way. There were some places where if you bought on it, it did, fall underneath it. That's what stop losses are for. But I think if you add it up, it's probably about 70 to 80% where it's, an accurate signal, maybe even higher. Right? Every time it touched here in this downtrend, it just kept moving down, right? That's what you want, is one that's more than 50%, right? 70, 80%, that's killer in trading. So 19-week moving average, super awesome stuff, okay? And again, I want to give credit to David Eisner. He's the one that told me about that. I can't remember the name of the book he read about it in. He didn't read about the 19-week. He read about the idea, the concept of the magic line, and then he himself went out and figured out which line worked best for Bitcoin. So pretty cool stuff. I want to talk about several different charts today, so let me kind of pull some stuff up. Somebody asked me earlier, they said, James, what do you think the max pain scenario actually is for Bitcoin? And I'm looking for the chart for that, and it seems to have... Okay, no, this is it right here. I just have way too many indicators on there. This is a bit of a mess, so let me try to make this a little bit more visible. I've been talking about this a little bit lately, just real quickly to kind of reiterate. I do think this is the max pain scenario. It's kind of what I just talked about. If you measure from the top in 2013 to the bottom in 2014, it did have a false rally up to the 38.2 and then it collapsed, right? We are literally sitting just above the 38.2 right now. So this looks a whole lot like this to me, but we'll see, okay? What this stuff down here was, I was trying to compare... let me just get rid of a few of these so it's a little bit easier to see. So MACD back here, basically I noticed that it had actually put in a buy signal right about here, and it's doing the same thing now. So MACD is a little bit similar, and also the RSI is very similar. The bottom, or the false bottom in 2014, actually came down right around 42 RSI. This bottom back here in November, the actual lowest close that we had, was actually sitting right at 40.05. And again, this one over here was at 42.238. So close, but not exact. And then this pump, this false rally, actually got all the way up to 58.61 on RSI. Right now, we're actually sitting at 57.9. So some very similar characteristics in the RSI. So wanted to share that with you guys as well. Again, this is not about being super bearish or anything like that. I just want to point out what I'm saying on the bigger time frames and why I'm not, suddenly investing 100% of my what they call powder, right? My available money for crypto. Why I'm not putting 100% of my portfolio back into Bitcoin yet. So looking at a nice clean weekly chart, let's take the 19-week moving average off and just take a look at this. A couple of key things to notice: our weekly candle is going to close in about 90 minutes from now. Right now it is peaking up outside of what I would consider the bear market RSI zone. But again, that zone was based on 2018, not previous bear markets. So if this is more like 2014, we already know that I just showed you the similarities in RSI, okay? So I'll be watching this candle, kind of see where it closes. If you want to get super bullish, ideally you want to see this thing pump up, and you want to see it close above 95.48. That is the high. A close underneath that would be a lower high. Now, it doesn't mean that it'll hold. It could still go up next week and close even higher, okay? But a close underneath that gives us more suspense, if you will, about whether this was a higher high or a lower high. If it closes above it, boom, we've got our higher high, okay? If I take a look at the 3-day chart, let's get rid of that weekly, go back to the 3-day. Again, I don't really have anything on the 3-day chart that's giving me a clear indication of where this thing is going. You're seeing some indicators on here, just some stuff I'm kind of toying with, but it's not anything that I'm super confident in yet. Okay, let's turn the volume off. Basically, we do have this downward sloping red line, and we've got this yellow line of resistance. That's kind of where we're stuck between, right? Are we going to break through this resistance, or are we going to come back down and maybe retest the top of this red line? Who knows, all right? This red box, we're clearly outside of this red box, so I just leave it on there because who knows, we might come back down inside of it. But this again looks like a bullish retest. We talked about this in past videos. It pumped up. What I'm looking at now on the RSI, I had this upward sloping trend line from back here in 2018, and it seems like it acted as support right here in August. Seems like it acted as resistance in October. Seems like it acted as resistance in January so far, and now it looks like maybe it's acting as resistance here in February. Time will tell. The other thing that I have drawn on here, it's a little bit difficult to see because I've got it yellow, but let me see if I can change this to maybe a green, okay? So this is a parallel channel that I'm taking a look at. So it started here, had support here, had resistance here, and seems to be acting as resistance here. So I'm not super confident in this channel yet, but if it is indeed a channel, we could see it go back down to the midpoint or even back to the bottom of the channel, which would put us back inside our bear market box, okay? So that's what I'm watching on the 3-day chart. On the daily chart, okay, here's what I'm seeing, guys. Let me zoom out a little bit. This is going to be tough to see, so we'll break this down. The first thing I want to talk about is the fact that price is obviously moving up. No one can deny that. But at the same time, we actually have, let's talk about MFI first, which is money flow. We basically have less money flowing into Bitcoin. So we have a bearish divergence, a very large bearish divergence, and this downward sloping trend line. I don't trade MFI a whole lot. Once in a while, I'll put it on there if I want some confirmation of, maybe if I think something's going to happen, I might throw a couple extra indicators on there to see if they also back up that opinion. So it's more of like a secondary thing. But I did find this a little bit concerning. If I want to get bullish and I'm looking at MFI, it's tough to do so because we do have a massive divergence there, a massive bearish divergence. Wish there was a way to just hide it and bring it right back, but oh well. I'll get rid of that. And if we look at RSI, here's what we have in RSI. We have this upward sloping trend line, and we have these two double tops. We had a double top here that led to an obvious pullback. This is where it pulled back from around 9,200 down to 8,200. Now we have a whole brand new double top, and we're getting a very cliche retest of the neckline. That neckline also happens to converge right on that trend line. Will it hold as resistance? I don't know. I don't have a crystal ball. I can't predict the future. All I know is if I want to be bearish and open short positions, I want this to hold. If I want to be bullish and open long positions, I want to see this break through this level of resistance. And I do believe, firmly believe, that if we break through and close above those levels, I think we will see Bitcoin probably pump pretty hard, right? I don't think it's going to just suddenly pump to 9,600 and stop. I think it's going to pump hard because, as I've talked about in past videos, when you do break through these lines, there tends to be a huge pump that follows. A perfect example is right here. Broke through this line back here, and what happened, right? Price closed at 7,700, and the very next day, it pumped up to 8,200. The day after that, it pumped up to 8,400. So you had basically, price pumped up from the time it broke and closed above this, pumped up from 77.64 all the way up to 84.69. Huge, right? Almost 10%. So if it breaks through that, I think we break 10K. Okay, if it closes above this resistance, I think 10K is going to be taken out. So, again, it's not bullish or bearish. It's just, it gives you a line in the sand. Underneath it, bearish. Over the top of it, going to get very bullish. And now let's take a look at our channel. So we have our downward sloping channel. We have our upward sloping channel. Obviously, we broke out of the down channel. Doesn't mean we're done with the down trend yet, but we are out of the downward channel, okay? And we found support on top of it, which was bullish, and now we've busted up, and basically we're testing the top as resistance. That red line is that fat red line of resistance, that weekly high that we need to close above in order to get ultra bullish. Okay, so far we haven't done it, and it feels like the bulls are running out of steam. We have obviously less money flowing in. We have the double top on RSI. We have the resistances on RSI. We also have dropping volume, so that's another bearish divergence. When you sit here and you see price going up but volume going down, it's often a sign that you're getting faked out by the powers that be, right? What essentially happens, because people ask, like, what does volume mean? Well, think about this. Like, stop looking at the chart for a second and ask yourself, what does it mean? Essentially, it means that there's less volume being traded. There's less resistance and less support. That means the people with the big pockets, they have an easier time manipulating the market. So if they want to short the market, what do? They pump the price up on low volume. They get it up to the area that they want to short, create some liquidity up there, and then they short the market and dump it. Okay, and vice versa. If they want to pump the market, right, they wait till the volume is low, and then they start selling off their coins or their assets. They push that price down further into their buy zone, and then they buy it up, and then it starts to pump. Okay, so to me, this looks like a fake, rally. It looks. I'm not saying that we're going to go back down to 6,400 or below 6,400. I really don't know about that. I'm very, very confused about whether or not that was a low or was not the low, and I'm happy to say that I'm unsure of whether this was the actual bottom. Okay, what I feel much more confident in is that this price wants to pull back. Okay, how far it pulls back, again, that's the part I'm not sure about. I still think that it could pull back to this area here around 7,800 to 8 grand, putting that giant inverse head and shoulders, tag the top of this downtrend, confirm that it is indeed support, and tag the bottom of this uptrend, and suddenly we have this perfect storm for our rally going into the 2020 halving. Okay, if it falls down here and this stuff fails, guys, I think it's an almost, I don't ever want to say guarantee, but if these levels fail, it's almost guaranteed in my mind that we'll take out this low. Okay, that's essentially what I'm watching for, is if this fails, I think this low gives way, and I think we go back to the bottom of this channel, back down around that $4,000 level that I talked about really for the last 7 or 8 months. Okay, just have to wait and see. The great thing about charts and trading and technical analysis is, no, you can't predict the future, but it does give you all these clues. And it's like, okay, well, if this happens, then this is probably going to happen. And if that happens, this is probably going to happen, so on and so forth. Okay? The 200-day moving average, this is important to talk about. Essentially, it's sitting around 88, 82 right now. So if this comes down and finds support there and starts moving up off of it, I've got to get into a long position, right? I've got to find a long position, me personally. I'm going to feel like that's the final bullish retest, and that's probably it, right? On the flip side, if it gives way and we go back to the bottom of this channel, things do become more complicated because we could potentially find support down here at this 7,800, could come up for another retest of the 200 and find out that it's now turned into resistance again and then collapse, okay? There's a lot of gotchas going on right now. It hasn't actually it's not giving this signal that's a crystal clear signal. Now, people want to pretend it is, right? People who are bullish want to pretend like this is a guaranteed for sure thing. This is happening. It's going to the moon. Guys, there's nothing guaranteed about this. This is as choppy and as nerve-wracking as anything I've seen since I started trading crypto back in May of 2017. This is probably the most unsure I have ever been about the market. Point blank. Never been so unsure in my life. If you're more sure, congratulations. I mean that sincerely. I'm not. I don't feel good about this at all. I just don't know which way it's going. By the way, I did want to point out that, I talked about being in some shorts yesterday. I did close those shorts. Closed them for a really nice win. I actually closed them at 91.67. So, when this thing dumped last night, I was able to close them right there, right? Why did I close them there? Very simple, guys. I had posted on Twitter about this before it happened. Basically, we had this triangle forming, and we had, if it broke north, our target was going to be up here. If it broke south, our target was here. And basically, it pinged that target perfectly. And almost every time I've seen that happen in the past, you always get a violent bounce off of it. If it goes up, you get a violent dump. And if it goes down, you get a violent pump. That's exactly what happens. So I did close it on the dump. And I'm still in my spot long positions that I bought around $9,200. So I didn't close them, wasn't stopped out on them, but did make a really nice trade on the short. On the smaller time frames, like let's look at BitMEX chart. I have a little bit less indicators on there, a little cleaner. Let's turn these moving averages off. Okay, so essentially what I'm seeing on this, guys, I just see this upward sloping trend line that's been broken. Okay, oh, there it is. Okay, so I've got this more gradual one, which again, if you look right now, it's down around 7,800 to 8 grand. So if it pulls back to that, could be a nice uptrend forming. We have this more parabolic one that was back here, right from around 8,200, and it was broke, guys. It broke through it last night. Okay, get some of this stuff off there. I haven't even been watching the price the last hour. I probably need to look at it. It's down quite a bit. But essentially, once it broke through this to me looked like a bearish retest, and then you had your dump. So again, I got out of the dump, and then I haven't done any trading today. I didn't get up until about noon, so I've only been up for about 4 hours. I had to take a shower, and obviously I'll get cleaned up and all that stuff. But so far, this is underneath that line. So, I'm not going to be bullish while we're sitting underneath this parabolic line. It just looks like it's ready to retrace. What happens typically when you retrace on a parabolic move like that is you'll retrace back down to around the 61.8. So that's going to be down around right in this ballpark if it retraces down to there. Again, that doesn't mean we're suddenly going to $5,000 or anything. We're talking about these smaller time frames. It's smaller moves, right? If it retraces down there and finds support, it can absolutely move off of that still. So that's what I'm watching on the smaller stuff. I'm not in a short, right? I don't really plan on taking a short unless I see a setup. I don't see any setups on the smaller time frames right now. I just see chop, okay? I don't want to get chopped up. I want to stay out of that stuff, all right? We're about 27 minutes. That's not too bad for a video. So let's take a look, I guess, at total market cap real quick. So this was our downtrend. I mean, really the downtrend has been broken, okay? And I don't mean downtrend like Bitcoin's downtrend. This is the total market cap downtrend. It is broken, okay? And let me show you why it's broken. Let's take all this stuff off, and let's just put a weekly chart on there. Let's make it a line chart. There you have it. You see it? Hopefully you've seen this now after watching my videos. There was your weekly high on the total market cap. It is now trying to put in, I mean, we've only got a little over an hour left. So maybe this thing dumps hard in the next hour. It won't do this. But if it closes up here we've put in a higher high, and the downtrend is now officially busted, right? Not just because we're out of the channel, but because we've actually punched in a higher high. We've now, broken the bearish structure on the total market cap. So as far as my trend lines and my extensions and things like that, they're out the window. If the downtrend is busted, I can't draw a trend line that looks like this, or a trend extension that looks like this, because that trend is broke. Okay, I have to look for a new trend, basically, right? Again, just one more reason that I'm unsure about things. Okay, if we take a look at the total market cap on alts, people are getting euphoric on alts. That's a bad idea. It's a bad idea to get euphoric. Okay, yes, we have this massive pump, but if you're just looking at this and thinking about this, does that look sustainable? Does that angle look at all sustainable to you? Of course not. That's not sustainable, right? Things that go straight up crash hard, okay? Now, we did punch in a much higher high on the weekly, okay? And unlike the total market cap, this is already confirmed, okay? And the reason is because this high here was 75.9 billion, and this close right here, the January 13th candle, closed at 76 billion. It already closed above it. So that's a confirmed trend reversal, okay? What I'm watching for in alts is what happens after a big move is I want to find the retracement. I want to find out where it's going to retrace to. That's what I'm looking for in altcoins, okay? Put this back on a candlestick chart, draw some Fibonacci levels. We don't know where the top is yet, but assuming this is the top, that pullback, I'm going to be looking for a pullback down to around 63 billion, possibly even 58 billion, okay? Now you might say, oh, I don't know if I like those levels. Well, watch this. See that? That was the neckline from 2018 through the early part of 2019. Pumped up off of it, came down and retested it, fell underneath it. Now we've had this huge pump. It would be totally normal to come back down and retest it again before finally moving up. Will it happen? Don't know. Just know that I'm not going to be investing in alts and chasing down alts that have already pumped 100 and 200%. That's not where I want to put my money. I want to find alts that have just retraced back down to their golden reload zones and look for those types of positions. Look for bullish structure, look for W's, look for inverse head and shoulders, that type of thing inside the golden reload zone. And again, right now that golden reload zone is going to be down between the 64 billion and 58 billion area on altcoins. With that being said, guys, obviously I am some guy sitting in a spare bedroom, so nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. If you enjoyed this video, please be sure and give it a thumbs up. Don't forget to subscribe to the channel. And don't forget you can check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and we can join my paid trading course if you'd like to learn technical analysis and how to trade for yourself. This is James with Crypto Common Sense, reminding you to please trade safe.